In today's video, you will learn more about two chip makers with both high future expectations. I'm talking about Nvidia and Qualcomm. But how do they compare based on price performance, dividends, revenue, net income, valuation and their future expectations? Hi, this is Tom from the Dividend Attitude. Welcome to my channel. We now have hit a new milestone. We have surpassed the 500 subscribers mark. Thank you all for your support. It motivates me to keep putting in the work and making more videos. Full disclosure, before we begin with analyzing Nvidia and Qualcomm, I do own Qualcomm, but obviously I will try to be as objective as I can. Nvidia is a very well-known brand among gamers for its GeForce video cards and is divided into two segments, GPU and Tegra processor. The GPU segment develops the video cards and their products are used by gamers on PC, for cloud gaming, and also design professionals use their products for video editing and so on. The Tegra processor segment develops processors for mobile gaming, AI, self-driving vehicles, medical instruments and robotics. And then Qualcomm. Qualcomm develops foundational technologies that are used in mobile devices and other wireless products, such as networking equipment, consumer electronic devices and so on. Qualcomm operates through three segments: Qualcomm CDMA Technologies, QCT, Qualcomm Technology Licensing, QTL, and Qualcomm Strategic Initiatives, QSI. Qualcomm was a stock that had depressed prices for many years because of the ongoing litigation it had with Apple, among others, over their royalty fee practices. These lawsuits are now all settled, which is very good news for Qualcomm. They also stand to gain from the rise of 5G. Both Nvidia and Qualcomm operate in the semiconductors industry in the IT segment. Starting with the market cap, which is simply the total current market value of a company, so it can be calculated by multiplying the current stock price times the number of outstanding shares. Nvidia has a market cap of $316 billion, while Qualcomm has a market cap of $164 billion. So the market cap of Nvidia is more than twice as big, but both are considered mega cap companies. Nvidia is one of those companies that have done really well during the current crisis because of the ever increasing interest in gaming, for example. The price performance year to date of Nvidia is an astonishing 147.5%, while Qualcomm only gained 64.4%, and only is between quotes, because that of course is still a great gain. Although, as we can see, most of that gain came recently after Qualcomm released its fourth quarter earnings of fiscal year 2020. The 5-year chart of Nvidia is absolutely crazy with a gain of 1746%. That is double the gain of Tesla, for example. Qualcomm naturally comes in a lot lower at 171.5%, again, still pretty good. The beta of Nvidia is quite high at 1.59, while that of Qualcomm is at 1.33, so both are way more volatile than the overall market. Based on a bigger market cap and a much better price performance, Nvidia wins the first round. And now, my favorite part as a dividend growth investor, the dividends. The current yield of Nvidia is not much to write home about, with an abysmal current yield of 0.11%. The current yield of Qualcomm is also not that high at 1.79%, but of course a lot higher than that of Nvidia. Nvidia started paying dividends quite recently and now has a track record of 7 years of dividend growth, but has not raised its dividend since November 2018. Qualcomm has been raising its dividend for 18 years now, so they have a head start of about a decade on Nvidia. Since Nvidia has only been paying a dividend for 7 years, there's no 10-year dividend growth rate. The 5 and 3-year dividend growth rates are at 13.5 and 9.7% respectively. There's no 1-year dividend growth rate since Nvidia has not raised their dividend since 2018, which for a dividend growth investor is of course concerning. Qualcomm has a nice 10-year dividend growth rate of 13.5%, but as you can see the 5, 3 and 1-year dividend growth rate have all been trending lower. As an owner of this stock, I hope that the recent results will result in higher dividend growth rates as well. Nvidia has an earnings payout ratio of 7%, while Qualcomm has a payout ratio of 37%. Normally I would favor companies with lower payout ratios, but a payout ratio of only 7% shows us dividend investors that Nvidia does not have its focus on growing their dividends. The free cash flow payout ratio of Nvidia is showing the same picture as with the earnings payout ratio. With a 10.8% free cash flow payout ratio, they are paying out a very insignificant portion of their free cash flow in dividends. The free cash flow payout ratio of Qualcomm is a bit on the high side at 75%. The dividend safety score of Nvidia is 89, so considered to be very safe. Qualcomm has a dividend safety score of 80, so a bit lower but still considered safe, bordering very safe. The safety score of Qualcomm was upgraded in August 2020 from 54 to 80, due to the legal issues surrounding their patents being resolved. With a better current yield, dividend history, more favorable dividend growth rates and a healthier payout ratio, Qualcomm wins this round. If you liked the video so far, don't forget to crush that like button and make it turn blue. If you enjoy videos like this, consider subscribing because I will do more of these in the future. The revenue of Nvidia went up by 23.1% annually on average, from 3.5 to 10.9 billion in 2020, with a lot of that growth coming from the 5 recent years, so that looks very good. Qualcomm had an average revenue growth rate of 6.37% annually over the last 10 years, from a bit under 15 billion to 23.5 billion, with quite some negative growth in the middle of those 10 years. Because we're looking for growing companies, Nvidia wins this round with a higher annual growth rate over the last 10 years. The gross margin of Nvidia is 62%, which is the highest it has been in 10 years, while the operating margin is a lot lower at 26.1%, at the midpoint of their 10-year average. The lower operating margin has to do with the fact that they don't make the chips for their GPUs themselves, instead they are produced by TSMC. With Qualcomm, we can see a similar picture, with a gross margin of 60.7% but an operating margin of 26.6%, which are both at the midpoint of their 10-year average. Because the operating margin is what matters most, Qualcomm wins this round with a slightly higher operating margin. The huge run-up in price of Nvidia can be explained by their explosive growth in net income, which went from 253 million to 2.8 billion for an average growth rate of almost 112%. Qualcomm grew a lot slower at 2.5% on average, from 4.3 to 5.2 billion in 2020. It is obvious that with such a high growth rate in net income, Nvidia wins here as well. The free cash flow generation of Nvidia is also quite astonishing. It went from 0.98 to 5.9 in 2020, so it increased sixfold, all this time while covering the dividend. Qualcomm again has a slower growth rate and the free cash flow went from 2.55 to 3.37. There were 2 sharp dips in between 2015 and 2017. Qualcomm has been covering their dividend all this time, but like we noticed before, the margin between dividends and free cash flow has become a bit thinner in 2020. Qualcomm can't compete with the free cash flow generation of Nvidia, so Nvidia also wins this round. Nvidia has an excellent debt to equity ratio of 0.21 in 2020, and it was even lower in 2011 at 0.01. The debt to equity ratio of Qualcomm ballooned in 2018, mainly due to a decrease in shareholders' equity due to decreased assets, mostly cash. In 2019 and 2020 it came down, but is still high at 2.51. The current ratio of Nvidia is very solid at 7.67, which is on the higher end of their 10-year range. Qualcomm also has a decent, albeit lower, current ratio of 2.14. Just like the current ratio, the quick ratio is also very high at 7.03, but again at the higher end of their 10-year average. The quick ratio of Qualcomm is at 1.75, which is also very decent, but obviously a lot lower and at the lower end of their 10-year average. So the winner of this round is quite obvious as well. With a better debt to equity, current and quick ratio, Nvidia wins here as well. The return on equity for Nvidia is at 26%, right around the midpoint of their 10-year average. Qualcomm has a much higher return on equity of 94.6%, but this is inflated due to the relatively low shareholders' equity of Qualcomm. The return on invested capital of Nvidia is at 20.4%, the midpoint of their 10-year average. And again, Qualcomm is higher here at 26.3%. Both Nvidia and Qualcomm have an S&P credit rating of A-. Based on the better return on equity and return on invested capital, Qualcomm wins this round. As you can clearly see from the almost parabolic price line, the black one, Nvidia is severely overvalued according to Fastgraphs and would return minus 47.4% annually until the end of January 2022, if it would return to fair value, the orange line, and 34.6% if it would return to the PE the market has historically valued Nvidia at, the blue line. Likewise, Qualcomm is also overvalued according to Fastgraphs, but not as much as Nvidia. Qualcomm would return minus 8.1% if it would return to fair value, but it would actually return 15% annually until September 2022 if the analysts are right and it returns to the PE the market has historically valued Qualcomm at. Finbox sees a potential downside of almost 30% to the current price with an estimated price of $391 from the current $554. The same applies to Qualcomm, where Finbox expects a downside of 20% to $115.6 from the current $145. Nvidia and Qualcomm are both in different stages of their business cycle with different growth rates, so the PEG ratio is perfect to use in this situation to compare these two stocks. Nvidia is also overvalued based on the price to earnings to growth ratio of 3.6 on Morningstar, where a PEG ratio of 1 to 2 would typically indicate fair value. Interestingly, Qualcomm has a PEG ratio of 0.9 according to Morningstar, which would indicate undervaluation. This most likely has to do with the predicted forward earnings growth, more on that next. So based on less downside on both Fastgraphs, Finbox and a better PEG ratio on Morningstar, Qualcomm wins here. Like always, we can only gather so much from the past, so let us look at the future. For Nvidia, a 56% earnings per share growth rate is expected for fiscal year 2021, according to 36 analysts on Fastgraphs. Fiscal year 2021 ends in January for Nvidia, so it is quite likely that those expectations will be met. For fiscal year 2022, a 21% EPS growth rate is expected. That would mean an EPS of 10.93 at the end of fiscal year 2022. Analysts on Yahoo Finance are even more optimistic and they expect earnings per share to be at 11.1 at the end of fiscal year 2022. Qualcomm is also expected to grow its earnings per share significantly according to 26 analysts on Fastgraphs. They expect a 67% growth rate in fiscal year 2021 to an EPS of 6.98 and a 15% growth rate in fiscal year 2022 to 7.91. Analysts on Yahoo Finance are a bit less optimistic and they expect an EPS of 7.78 for Qualcomm at the end of fiscal year 2022. This round is very close, but Nvidia wins with a slightly better expected growth rate until the end of fiscal year 2022. So the winner of this stock battle of the chipmakers is Nvidia, which is probably not that surprising considering that Qualcomm is recovering from the litigation battles with Apple and other phone manufacturers, while Nvidia was and is firing on all cylinders. If you came this far into the video, consider subscribing because I will do more of these stock battles in the future. And if you want to get a free share on Trading 212, one of the few commission-free brokers with fractional shares automatic buy investing available to the EU, sign up through the referral link in the description below. We'll both get a free share worth up to $100, pound or euro. Until next time, bye bye.